What if I told you that right now, as we speak, a silent and highly confidential financial operation is being prepared within the vaults of some of America's most trusted banks? An operation so discreet that the average teller might have no idea, yet one that could directly impact the financial future of anyone holding a specific, powerful asset. This isn't a scene from a spy thriller. This is the emerging, documented reality for holders of the Iraqi Dinar and Vietnamese dong as we move deeper to 2025. And if you are watching this, it means you are likely sitting on a potential fortune that cannot be spent at your local grocery store, but must be strategically converted through a very specific, newly established channel. The door to exchanging your dinar and dong for US dollars is finally creaking open inside the United States, but let me be brutally clear, this is not a simple process of walking into any bank branch and walking out with cash. It is a meticulous, multi-layered procedure governed by international finance laws, bank-specific compliance protocols, and a critical need for absolute verification, and missing a single step could see you turned away at the counter. Your investment trapped in a state of illiquid limbo. The entire journey begins not with a phone call or a bank visit, but with a piece of knowledge so fundamental it will determine your success or failure from the very first moment. Knowing exactly which financial institutions have been officially authorized and equipped to handle this highly specialized transaction. Based on the most current 2025 data, compiled from investor reports, internal banking circulars, and direct testimonials from those who have successfully navigated the pre-verification stage, we can now confirm a definitive list of U.S. banks that are actively, albeit quietly, processing these exchanges. At the forefront of this list stands Wells Fargo, a name long associated with the Dinar community, which has maintained and even upgraded its foreign currency exchange divisions with advanced authentication systems specifically calibrated for the latest Iraqi dinar and Vietnamese dong security features, making them a primary hub for this activity. Following closely is Chase Bank, which has implemented a tiered appointment system where you must first speak with a designated branch manager who has received specialized training to identify legitimate currency from the sophisticated counterfeits that have flooded the market, aiming to protect both the bank and you, the investor, from catastrophic fraud. Furthermore, Bank of America and Citi have emerged as key players, particularly for larger, what are internally classified as Tier 4B transactions, which involve substantial volumes of currency, requiring pre-scheduled appointments in main regional branches that have the secure facilities and the direct satellite link to the Central Bank of Iraq and the State Bank of Vietnam for real-time validation. The list extends crucially to include ASBC, whose global footprint provides an almost seamless conduit for verification, especially for the Vietnamese dong. Due to their significant operational presence in Southeast Asia, alongside other confirmed institutions like US Bank and specific large credit unions that have partnered with these larger entities to act as secondary redemption points, creating a network that is both robust and deliberately low profile to prevent systemic overload. However, and this is the most critical point of this entire first segment, simply knowing the bank's name is less than 1% of the battle. The true key, the golden ticket, is understanding that every single one of these institutions requires an appointment scheduled through a specific channel, a direct phone call to their main foreign currency desk, not your local branch. And this appointment cannot be made until you have in your physical possession the one non-negotiable document that proves the origin and legitimacy of your holdings. A requirement so stringent that failure to comply results in an instant and irreversible rejection. This document is your original physical purchase receipt from an authorized and licensed dealer. A piece of paper that many investors unfortunately overlooked or misplaced years ago, which the banks now treat as the primary evidence that your currency was not acquired on the black market or as part of a counterfeit batch, making it the single most important item you will need to present before any conversation about exchange rates or procedures can even begin, setting the stage for the intricate, by-step process we will delve into in our next segment. Process that will take you from the initial phone call all the way to the moment you walk into the secured room to finalize your transaction. Now, prepare yourself for the single most critical and shocking revelation of this entire process. The moment you successfully schedule that coveted bank appointment, you are not walking into a standard transaction. You are essentially stepping into a high-stakes financial audit where your every document, your every note, and even your personal financial history will be scrutinized under a microscope of compliance so intense that it has caused even seasoned investors to falter, not because their currency was fake, because they failed to comprehend the psychological and procedural gauntlet that awaits them behind those polished bank doors. This is the phase that separates the prepared from the panicked. And your success hinges entirely on mastering a meticulously choreographed sequence of steps that begins the second you end the call confirming your appointment. The first and most non-negotiable action you must take, one that I implore you not to skip, is to assemble what is known in official circles as the trifecta verification, a trio of documents that, when presented together, instantly elevates your legitimacy in the eyes of the banking officer and streamlines the entire ordeal. The first is, as we discussed, that original physical purchase receipt from a licensed dealer, which establishes a clean and auditable chain of custody for your assets. The second is not one, but two forms of government-issued photo identification, with a current driver's license and passport being the gold standard, as this satisfies the stringent Know Your Customer, or KYC protocols that are triggered by any international currency transaction of this magnitude. The third, and often most overlooked document, is proof of your Social Security number, typically your Social Security card itself, which the bank is legally required to record and report to the Internal Revenue Service for any transaction that meets or exceeds certain thresholds, a fact that introduces the entire, unavoidable reality of tax implications that we will delve into later. Once you have this trifecta physically assembled in a secure folder, your next step is what I call the pre-validation ritual, a crucial proactive measure you can take from the comfort of your home before you even step foot in the bank. You must take your currency notes out of their storage and, using a high-quality jeweler's loupe or a powerful magnifying glass, personally inspect every single series of security features on each note, comparing them directly to the official security documents published on the Central Bank of Iraq and the State Bank of Vietnam's websites for 2025. You are looking for the specific holographic strips, the color-shifting ink on the denominations, the precise micro-printing, and the embedded security threads. This is not a suggestion. It is a necessity, because if you present a note that fails the bank's initial visual inspection, the entire transaction can be frozen on the spot, and your entire portfolio could be flagged for further, lengthy investigation, derailing your financial plans for months. On the day of your appointment, you will arrive at the bank and be ushered not into a public teller line, but into a private, secure room, often adjacent to the vault, where the atmosphere is deliberately formal and pressurized. Here, the bank's designated specialist, who has been trained for this exact scenario, will begin a two-part verification process. The first part is a technological validation, where they will use specialized currency scanners and ultraviolet lights to authenticate every security feature you previously checked at home, a process that can take a significant amount of time depending on the volume of notes you are exchanging. The second, simultaneous part is a verbal interview, a compliance-driven questioning designed to establish the source of your funds and your intended use for the exchange currency, questions you must answer with calm, confident, and straightforward responses without offering any extraneous information that could raise unnecessary red flags. It is at the culmination of this intense, dual-layered verification that the specialist will finally access their proprietary international banking system to lock in the official, live exchange rate for that specific day and moment. A rate that is not the publicly discussed investment rate or evaluation rate, but the current official international currency market rate set by the respective central banks, finally leading to the moment of truth where you must make a decision that will define your financial outcome. A decision between taking a physical cash payout or authorizing a direct wire transfer to your account, a critical crossroads with profound implications that we will explore in our final, decisive segment. And now we arrive at the most critical, legally perilous, and financially defining moment of this entire journey. The moment you are presented with the final exchange figures and must make a decision that will irrevocably shape your financial future. A decision that forces you to confront a shocking and deliberately unpublicized banking reality. The vast majority of investors who reach this final stage are so overwhelmed by the prospect of immediate cash that they blindly accept a standard pre-formatted wire transfer agreement, completely unaware that this single signature triggers a catastrophic cascade of mandatory IRS reporting, potential account freezes, and a tax liability event that can claim a staggering portion of their wealth before it ever truly becomes theirs. This is the grand finale, where knowledge separates the wealthy from the merely liquid, and your first and most monumental choice is crystallized into a simple yet profound question. Do you take a physical cash payout or an electronic wire transfer? The allure of physical cash is undeniable, tangible, immediate, and feeling like the ultimate reward for your years of patience. However, you must be absolutely prepared for the breathtaking logistical and security nightmare this entails, as receiving even a fraction of your investment's value in $100 bills will result in a physically massive, weighty stack of currency that poses an immense personal security risk, requires you to immediately secure your own armored transport, and still does not absolve you from the Bank Secrecy Act requirement that the financial institution will file a currency transaction report, or CTR, for any cash amount over $10,000, flagging your transaction to multiple federal agencies the moment you leave the building. The alternative, the electronic wire transfer, feels safer and more convenient, but this is where the most dangerous pitfalls are hidden in plain sight. When you authorize the wire, the bank is legally compelled to file not only a CTR, but also a more detailed currency transaction report by a financial institution, or CTRI. And if the amount is significant, Suspicious Activity Report, or SAR, may also be filed, creating a permanent paper trail that lands directly at the Internal Revenue Service, which will classify your entire gain as ordinary taxable income for that tax year, potentially pushing you into the highest tax bracket and unleashing a tax liability that could decimate nearly half of your windfall, unless you have preemptively engaged in sophisticated tax mitigation strategies with a qualified professional. This leads directly into the second cataclysmic mistake, the failure to immediately execute what is known as the Wealth Preservation Protocol, which is a non-negotiable three-step action plan you must initiate within the first 24 hours after your exchange is confirmed. Step 1 is to immediately contact a fee-only certified financial planner who specializes in sudden wealth management to help you navigate the labyrinth of tax laws and investment vehicles. Step 2 is to formally retain a top-tier tax attorney to liaise with the IRS on your behalf and establish the legal frameworks for your new financial status. Step 3, and perhaps the most vital, is to practice absolute financial silence, telling no one outside your immediate, trusted legal circle about your success, as the sudden influx of wealth can make you a target for every financial scam, distant relative, and opportunistic business proposal imaginable, threatening to erode your fortune before you've even had a chance to secure it for future generations. The entire purpose of this guide, from the first bank list to this final warning, has been to empower you with the unvarnished truth that the revaluation event is not the finish line. It is merely the starting gate of a far more complex race to protect and grow what you have rightfully earned, a race that requires discipline, knowledge, and immediate action. Now, here is your most important call to action. If you have found this information invaluable, if this step-by-step blueprint has given you the confidence to navigate this high-stakes process, then you must take the next step to secure your knowledge. I have compiled all of this critical information, including the direct contact procedures for each bank, the exact checklist for document assembly, and the detailed wealth preservation protocol into a comprehensive downloadable PDF guide available exclusively for our channel members. The link is in the description below. Do not leave your financial future to chance. Equip yourself with the complete playbook. Click the link, get your guide, and step into your new future with confidence and control.